Welcome back to the channel. Good to see you again. Now, join me whilst I'm looking at some data on Russia's export of oil. And if you're interested in what's going on in the economy in Russia, you're going to be fascinated by these figures because Bloomberg has been doing analysis. In fact, it does it on a weekly basis. And it's shown that in the week ending 4th of January, Russia's exports of oil were down by 10%. And the price of Russian oil has now fallen to $35 per barrel, which represents a discount of 42% against the current market price. And that's the biggest discount that we've seen at any point since the war in Ukraine started. And the total value of Russia's exports is also at the lowest level at any time since the start of 2022 when the war in Ukraine started. So what this tells us is that the sanctions are really having a devastating impact on Russia's oil business, which obviously means that it's going to have a devastating impact on Russia's economy. But have a look at this chart. It plots the movement in the price of Urals oil dating back to the start of October. So if you're looking at the dates here, obviously this is in the American format where you have the year, then the month, then the day. It's a bit confusing for people in the UK because they tend to put the day and then the month. So 10:01, if you're in the UK, would be the 10th of January, but it's not the 10th of January, it's actually October, the 1st of October. And you can see at that time, the price of Urals oil was sitting at $58 per barrel, which represented a discount to market rates, but nowhere near where it is now. And if we look at what's happened over the past 4 months, you can see that the price has come crashing down. And this is as a result of the fact that we've now got severely increased sanctions on Russian oil because of the direct sanctions that were applied against Rosneft and Lukoil, the two biggest oil producers. And what we're seeing, we'll have a look at it later in the data, that China, India and Turkey, the three biggest buyers, are all now pulling back from those purchases. And at $35 per barrel, that is significantly below the $59 per barrel that Russia included in its budget figures for 2026. We talked about the budget in previous videos, but even at $59 per barrel, if Russia was selling at that level, it left a huge deficit that's going to have to be funded from either the National Wealth Fund, which is running out, or from the sale of gold. So at $35 per barrel, then that deficit is going to be double, treble the original size. We're talking tens of billions of dollars. But unfortunately for Russia, the situation's getting worse. This isn't the end of the story. $35 is only where the price is right now. It might actually get a lot worse. And if we have a look at the value of exports, this graph shows the value of Russia's oil exports dating back to the start of 2022. And the war in Ukraine kicked off in February of 2022, so that's why we're going back to that as a reference point. And the black line here shows the 4-week average. The yellow line shows the weekly figures. So obviously the weeklies move around a lot more. That's why it's a bit more volatile. But if we look at the black line in terms of the general trend, you can see that in 2022, prices initially jumped up and then came crashing back down, or the total value of the exports came crashing back down and hit a low point at the first quarter of 2023, when it got down to less than $1 billion per week. Now you can see that in 2023, the export value actually started to increase, and this was because China and India were happily buying lots of Russian oil, and Russia was able to benefit from the overall increase in global prices of oil that pulled up the price of Urals oil as well. But you can see from 2024 onwards, we've been on a significant downward trend. And that's partly as a result of the fact that global oil prices have been trending downwards over the past couple of years as the global economy has slowed down. But it's got significantly worse over the past few weeks. And if we have a look at the latest data for the first week in January, it shows that Russia's income is now down to $835 million per week, which is a huge drop from where it was back at the start of 2024 when Russia was earning over $2 billion per week. So we're talking less than half of where Russia was around about 18 months to 2 years ago. And I thought it was worth having a look at this write-up by Bloomberg, which says on a 4-week average basis, the gross value of Moscow's exports fell to 960 million a week in the 28 days to January the 4th, sliding by 10% from the figure for the period to December the 28th. Average prices fell for the 14th straight week, and combined with the drop in flows to take the value of shipments to the lowest since at least the start of Russia's invasion of Ukraine in February 2022. So this is a new low point for the Russian oil industry. Now, just before we go on any further today, can I ask anybody that hasn't subscribed yet to please hit that subscriber button? Really helps me with the algorithm and also puts a smile on my face. And also wanted to remind you about my competition, which is another way of supporting the channel. You can win my beach house located close to one of the best beaches in the whole of the UK. And if you're not interested in that, I'm offering an alternative cash prize of £250,000. So if you'd like to get involved, it's a bit of fun, you might win, you never know, then please scan the QR code on the screen now with your phone. That'll take you straight through to the independent company that's hosting this competition for me. They will be picking the winner at random. It won't be me, so it's a complete level playing field. Everybody's got a chance. And if you have a look on there, you'll be able to buy some extra tickets. If you buy multiple tickets, you get some bonus tickets. So have a little look at that. It's a bit of fun. Thank you so much for supporting me, and let's get back to the details. Now, if we have a look at this chart, it shows the amount of Russian oil currently on the sea. So this is basically oil that's been loaded onto tankers that hasn't been delivered. And what this chart shows is that since August of 2024, there has been a rapid increase in the amount of oil that's been loaded onto tankers but hasn't actually been unloaded anywhere else. In August, the average amount of oil sitting on the sea at any one time was around about 130 million barrels. Today, it's sitting at 190 million. So it's increased by 50%. And the reason why it's increased so significantly is because the big buyers are pulling back. They don't want to get caught in secondary sanctions. So Russia is still loading the oil because it needs to do that. When you're pulling oil out of the ground, you have to put it somewhere, and Russia doesn't have anywhere to store this oil. So putting it onto tankers is actually quite a convenient way of just relieving the pressure, getting that oil out of Russia. But unfortunately, if you've not got a buyer, if it's not being delivered anywhere, you're not going to be paid. So Russia can quite happily keep filling up all of these tankers, but it's not getting any income. And the problem that Russia will have is at some point, all of these tankers will be full, and Russia won't be able to keep loading them up, and therefore it will then have to cut back on its production. And as we've talked about in many videos before, if Russia has to do that, that could be catastrophic for some of those oil wells, because the last thing that you want to do, if you've got flow coming out nice and readily, you don't want to cut back on it, because that can then start backing up in under the ground, causing clogging and all sorts of issues that when you then come to switch it back on again, it's not quite as simple as just turning a tap on and off when you're talking about oil, particularly in a lot of the areas where Russia is finding its oil, which are in very cold climates. And just to follow up on that point, this table shows the number of tankers loading at Russian terminals in the weeks ending December the 21st, 28th and January the 4th. And you can see from the figures at the bottom here, on the week ending December the 21st, 38 tankers loaded up. On December the 28th, it was 32 tankers. And on January the 4th, it was down to 30 tankers. So we're seeing a huge reduction in the number of tankers. And one of the reasons for that is because there's so many tankers that are already full, so there's not as many tankers waiting to load up. But secondly, there's less orders, and so you can't really just keep loading tankers up and then just sending them to float around on the ocean aimlessly. At some point, you need to pull back on your production. This graph shows the destination of the oil that's loading at Russian ports, dating back to the start of 2022. And we've got a number of different colours here, but I'll just pick out the key ones. The black section at the bottom are the sales to China. The pink section are the sales to India. And if we start off by looking at China, you can see that between 2022 and the end of 2025, there was broadly a slow increase in the amount of oil that China was buying from Russia. It maintained a good level of purchases. But if we zoom in and have a look at what's happened at the end of 2025 and the beginning of 2026, you can see a very worrying trend from Russia's point of view. There was actually a big increase at the end of 2025. You can see that that was the highest level that China had purchased at any time since the war in Ukraine started. And the reason for that was because the sanctions were announced in advance. So Donald Trump announced that the 21st of November was the key date when the sanctions would apply to Rosneft and Lukoil. So any orders placed before that date were still valid. You could still place them quite happily. Any after that date, you would be subject to secondary sanctions. So what we saw in China was a bulk ordering. They placed lots of orders in advance of that date coming up. So that's why there is a bulge at the end of 2025. And after that date, we are starting to see the level of purchasing coming right down. And you can see that the latest figures are the lowest that we've seen at any time in the last 3 years. Now, if we have a look at the pink section, the situation is actually much worse than what we're seeing for China. So India became the biggest buyer of Russian oil in 2023. You can see the pink section actually overtook the black section in terms of the scale. And also, India tends to pay more than China because there are some pipelines in place that provide oil directly to China through the pipelines, and that's cheaper form of delivery rather than having to load it onto a tanker, sail the tanker all the way to your port, unload it, and then move it from the port. So China gets a bit of a discount because it's got these pipelines in place. And you can see that India was quite happily buying lots and lots and lots of Russian oil in 23, 24, and 25. But if we look at what's happened at the end of 25 and the beginning of 26, you can see that the pink section has narrowed dramatically. In fact, it's less than half of what it was when India was buying towards the end of 2025. And if we have a look at this table, it shows the actual figures. So you can see that on November the 30th, China was buying 1.5 million barrels of oil per day. India was buying 1.4. So they were the two biggest buyers by a country mile. If we look at the figures for January the 4th, you can see that China's purchases have fallen to less than 900,000 barrels per day. So that's almost half. And India have cut theirs to 600,000 from 1.4 million. So that's significantly less than half. And you can see that the unknown Asia is now the biggest single category. So nobody knows where that oil's going or if it's actually going to go anywhere at all. I'm sure Russia is trying to disguise the origin of that oil. This is what Iran does and what Venezuela used to do, that they would do ship-to-ship transfers mid-ocean. So you can move the oil from one ship, which is being tracked, to another ship, which will be part of the dark fleet or the grey fleet, whatever you want to call it, and then it can deliver that oil, and maybe you can avoid the sanctions. But it becomes a lot more risky, and I'm not sure that India and China are on board for doing that sort of thing. So, as we said earlier, those ships might just be floating around for a long time full of oil. And I wanted to talk about Turkey because they're the third largest purchaser. And in the 4 weeks to January the 4th, the purchases from Turkey fell to 100,000 barrels per day, compared with 400,000 relatively recently. If we look at this graph, the yellow section shows the total purchases from Turkey. And you can see that in 23, 24, and 25, Turkey was buying a lot of oil directly from Russia. But similarly to what we've just discussed for India and China, recently we have seen a sharp reduction in those purchases. And this represents a problem because there aren't any other countries in the world that can replace the volume of purchases that Russia has been selling to China, India, and Turkey. So the overall summary of today's video is that what we are seeing is that the increase in the sanctions that were applied against Russian oil towards the end of 2025 are now severely hurting the Russian oil industry. We are seeing a fall in the volume of oil and also a dramatic fall in the price of oil because Russia is now having to offer these huge discounts to try to persuade some of the buyers to take the risk of being hit with secondary sanctions. But if you've been following the channel, you'll know that following the USA's intervention in Venezuela, we're now seeing that Venezuelan oil coming back into the global market. Previously, it was sanctioned, and so it wasn't really included in the official global supply. So buyers don't really need to be buying from Russia. Russia is trying to make it as attractive as possible by slashing the price and giving a bargain bucket deal. But even with those low prices, there is still a big risk of being hit with secondary sanctions. And Donald Trump is currently working on some legislation whereby anybody that's proven to be buying Russian oil will automatically be hit with sanctions. So you won't actually have to prove it, go through the chain, you just hit those companies with sanctions. So I think that's going to make the situation even worse for Russia. But what we've seen in today's video is that the price of Russian oil is now significantly lower than it was 3 or 4 months ago. It's currently down to around 40% of the market price of oil, and it could go lower than that. The volume of oil that Russia is selling is down to a low level, and the amount of revenue that Russia is earning from the sale of its oil is down to the lowest point at any time since the war in Ukraine started. And the problem that Russia has is that they are continuing to invest into the war in Ukraine. They are spending more than they're earning, so they desperately need more income at the same time as their income is crashing. So this represents seriously bad news for the long-term future of the Russian economy. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you have liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. Don't forget about my competition where you can win my beach house, close to one of the best beaches in the UK, or £250,000. It's another way of supporting the channel, so thank you very much if you're getting involved in that. Really do appreciate it. Thanks also to everyone that's supported me in other ways. If you bought me a coffee, sent me a YouTube super thanks, or signed up as a Patreon member or buy me a coffee member, really appreciate that support. Really helps to keep me going. And here's something to put a smile on your face.